Hello and welcome everyone to Oil Asset of the Day for the 20th of August, presented by myself, Phil Carr, at the Gold and Silver Club. So what do you need to know for oil prices for the week ahead? First of all, hedge funds and money managers with Brent crude oil, they have trimmed their net long positions slightly in the latest week, whilst also increasing their net long positions on WTI crude oil. You can see on the chart behind me that WTI crude oil has actually come up and retested just around that 56 to 57 US dollar per barrel handle over the last 24 hours. We are anticipating a potential rollover back towards the lower end of the range, taking WTI crude oil back towards 53 to 52 US dollars per barrel. But there are a few data points that you need to look out for over the course of this week. So on Tuesday, we do have the API data, which will be coming out later on in the session. The expectation is that we will see a drawdown of 1.9 million barrels from that data. So we'll be looking out for that, and that could be a bit supportive for oil if it is in line. Last week, of course, we did see an oversupply from both the API data and also the weekly crude oil inventories out on Wednesday. Now, overall, last week too, we saw a report from OPEC which highlighted less demand for oil and that having a negative impact on prices as well. However, last Tuesday, later on in the session, we had that breaking news item from the US and Washington that they were going to put a delay on tariffs to China. And with that, we saw quite a significant move to the upside with both WTI and Brent crude oil, over a 5% move. So we can see right now, we really need to keep an eye out for major news items. It's very important that you are looking at markets, and especially crude oil, with a research-driven approach. You need to be really on top of these major data items. What we're looking out for this week alongside these scheduled news items are, of course, the minutes of the FOMC as well, with respect to future interest rate cuts later on this year, which will also get more clarity on the Jackson Hole Symposium, where we've got Jerome Powell speaking on Friday. Reason we want to really keep an eye out for that: if we were to see a dollar breakout off the back of the minutes of the FOMC or Friday, for example, we're at 3-week highs on the dollar right now. If it was to break out above the 2-year highs, that would put pressure on oil to the downside. On the flip side of that, if we were to see the US dollar sell off significantly, we would then look out for both gold, silver, the precious metals to rally, but also oil prices as well. Brent and WTI crude oil, we would look to get some support off the back of that. You also need to keep an eye out for the tensions right now, again, still between the US and the Middle East with respect to the Strait of Hormuz and oil tankers in that region, where we are seeing that have an immediate impact. Any breaking news items with respect to that can very quickly cause oil prices to go higher. The positioning from funds right now does allow for a lot more upside and a lot more capital to come into the oil market and potential for short squeezes as well. So if you were to see sudden breakouts on oil, there is the potential for these moves like we had last week, where we saw a 5% move to the upside in just one day. But otherwise, outside of that, overall economic slowdown that we're seeing right now and a lack of oil demand is overall fundamentally it's negative for oil prices. We are seeing some funds build into positions with WTI, not as much with Brent crude oil right now, so you want to keep on top of that. But for the time being, I'm looking at range-bound trade outside of any major unscheduled news items. I would be looking for a potential for WTI crude oil to tap that 56 to 57 region at the upper end of the range, which we've done so already. We're at the upper trend channel as well, and then look for a potential for rotation with WTI crude oil to roll over back towards 53 to 52. And at that point, I would be looking for evidence of buyers to come in. So there might be opportunities to trade that in both directions with a view to potentially sell short oil back towards the lower end of the range. Look out for buying evidence at major levels of support there, around 52 to 50 US dollars per barrel for WTI crude oil, with a view to then take it back towards the upper end of the channel as we progress towards the end of this month of August, which normally as well from a cyclical and seasonal point of view does tend to be supportive for oil as we move into September. So with that, that's been Oil Asset of the Day, and I wish you good trading.